Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
Starting another session with very positive cues overall. Global markets are looking pretty strong, right?
Absolutely, and the bulls have it, right? This morning, at least, all the cues are stacked up in favor of the bulls. Let's see how it goes. Even earnings looking pretty good, the likes of Axis Bank.
Absolutely. And, the NASDAQ is done 8%, Sonia, in the last 3 trading sessions. And, here in India, we've been for the last, about 2 months or so saying, well, is it time to buy IT stocks? Is it, and because that was the one big sector which was down in a very large way. And as the NASDAQ has started to, because the changes on your screen, the NASDAQ is up 2% overnight. The last 3 days, it's up 7.5%. Year to date, it's up 8.5%. So basically the bulk of the NASDAQ gains have come in the last 3 sessions, as you can see very clearly. This has kind of given a little bit of confidence. I always say there is very little to do between, NASDAQ companies and Indian IT services companies. Many of them are the large companies. There are product companies. Here it's software services, but it's tech. And when NASDAQ does well, it does provide a bit of breathing room for tech here in India as well. And that move here in India has started. I'll get to that in just a bit. So, that's basically the global setup, which is very, very positive. Nifty yesterday ended higher, but it came off the highs of the day. We ended closer to 18,100. The day's high, we were closer to 18,200, not quite there. 18,162 or so was the day's high. But then, we pulled back a little bit. Of course, the first level to watch out will be the day's high. I think we'll take that out straight at the word go this morning at open. But then on the way higher, you got to watch for levels like 18,184, which is, again, something which is within reach with the 90-100 point open on the SGX that is indicative of. And then we get to the 50% retracement to the full fall, which is at 18,324. Is this the kind of break out of this range that we've been kind of talking about for a while? This range which has been in place all this year from 17,800 on the downside to 18,200. And it looks like if it's to be so, perhaps it'll be powered by the IT names. On the way down, 18,016 is the near-term support level. It is nothing but the low day before yesterday. And then the bigger levels that the Nifty must defend if there is selling which comes in at some point is 17,853 and then 17,761. These are well-advertised levels. One is a swing low. The other, of course, is the low that we saw late last year. So that's Nifty. Bank Nifty is the other interesting one. Bank Nifty ended about 0.75% higher. The resistance for the Bank Nifty comes in at 43,100. There's a falling trend line from the highs of December 15th. It's a clean downward sloping trend line. And on that, the resistance comes in at 43,100, which is not very far away. 200, 300 points away from where we are on the Bank Nifty. And above, once that trend line is taken out, the high of 43,576 could come into play. So that's the setup. I think it's been pretty clear that this is not a market where there is unbridled momentum on one side. There are pullbacks, then there is dip buying which emerges. So if you're trading, as has been the case for all of this year and maybe last year as well, buying the dip has made more sense. But I think it's slowly confidence is starting to come back. US is supportive, and the IT services pack is doing bulk of the heavy lifting, like what we've seen yesterday and the many sessions before yesterday as well. Guys, hi.
Hi, I genuinely thought you're going to start by talking about the weather because in Mumbai it was 20 degrees this morning, right? It was 18 yesterday. Generally in Mumbai it gets to this point, I think mid-Jan, and then it just goes away in like a week or so.
But it's not going away too quickly this time. I think on a day-to-day basis, it's getting a little bit colder. Particularly this morning, it's freezing.
We're all getting older, right?
That's the other factor at play.
At least I am.
Managing the cold is tougher. But yeah, it's cold winds, but hot cues, right, in the markets. I guess we can summarize it that way. What stood out for me really is that over the last many days, the FI selling has reduced quite a bit. So even in yesterday's trade, FI sold about 220 crores, barely something. But if you put together the last 10 trading sessions, you'll notice that from an average, way back, we've gone up to about 10th Jan or so, On an average, they were selling to the tune of around 2,000, 3,000 crores on a single trading session. And that has gone down to just about 300 crores. Of course, Jan 20th was a big sell figure. But on an average, if you see, the FI selling has reduced quite a bit. And that's something that the bulls will take with both hands. In fact, DI has bought about 434 crores in the cash markets yesterday. Very strong handover from the US. Second day running, Tesla had a big move on the upside. The Dow was up about 250 odd points, and very good earnings from Axis Bank. So there is not a single private bank that has disappointed this time around. Axis Bank adding to the list both ICICI Kotak that they began, NII growth of over 30%, NIMs at a 30-quarter high. So the important point is, you know, the previous high in Jan itself was about 18,230. That was the Jan high. Looks like the market is sort of getting to that level. Could be a bit of a resistance, but with the Q so strong, perhaps the market could take that out. The momentum is now on the upside, and the SGX Nifty is at the high point of trade. So the bulls are sort of tightening their grip on the market. Just a matter of time before these, you know, levels get taken out, I guess.
That's right, Sonia. And yesterday was a good trading session, but can we follow yesterday's good trading session with another good one?
Yeah.
You know, and the Qs are up there to start off in the green as well. The Nifty is running, you know, a race, and the start at least is going to be off the blocks in style. But can it hold on to that? That's the big question. Now, yesterday the FIs, they sold less, but actually their participation was far lower. It was 30% lower in comparison to the 10-day average, the gross participation, that is. The second point is the institutional numbers, is the FI and the DI number together. That was a positive number of close to around 200 crores. So you like that. What are the FIs doing the FNO market? Well, on index futures, they covered close to 10,000 short contracts, but now they're net long on the index. Remember, we were talking about this. Earlier, the short positioning was at around 65%. The long positioning was at around 35%. Now, the 35% has moved all the way to around 56%. So some part of that short covering has played out. On the option side, well, the data coming from the FIs is positive. They bought more calls than puts, and they wrote more puts than calls. So you like that as well. Focusing on the options data then, on the Nifty itself, the 18,100 put, the 18,000 put, between them, 58 lakh shares were added out there. And there were signs of writing out there. Remember, we play out expiry tomorrow. So the put writing is something that's very, very important. But for me, what is heartening is the Nifty Bank, it's come back in style and it's finding its form. Yesterday as well, it was an outperformer in trade. And on the 42,800 put, the open interest was up by close to 15 lakh shares. And the premium's around 170 rupees. The sense you get is there was writing being seen at that level. So on an average, the premium out there would have been 200, 250 rupees odd. Which brings us to the levels. Now for the Nifty, well, the important level, since the 42,800 put was seeing writing, the 20 DMA becomes important. That's the crucial support out there. So keep an eye out on that. Levels to track, 18,200, well, that's a resistance for the Nifty. Can the Nifty get past that and continue trading above that? Because as of now, the positioning is that we'll defend that mark. The crucial technical level on the upside, if we get past that 18,200, is 18,280, which is the 50 DMA. Support is at around the 20 DMA of 18,050. So we're going to start in the green. We need to trade above that 18,200 odd mark and try to make a bit of a dash towards the 50 DMA. Most crucial, the start well in the green actually as we speak.
Absolutely. I mean, a 100-point higher start on the SGX Nifty is what we have, 95 points. Well, before we start, let's tell you what's lined up here in the first half hour of the show. We'll get you updates from markets across the globe. Gary Schlossberg of Wells Fargo Investment Institute will join us to discuss the global setup and how he sees it. Our research team brings you CNBC TV 18's list of top 10 stocks to watch for the day. That's coming up. And at about 8:30 in the morning, we have Deepan Mehta of Elixir Equities to talk shop in terms of markets and stocks to watch out for as we start another trading session.
Okay, so lots happening in the next 2.5 hours, and keep it with CNBC TV 18 for all the action. By the way, it's a big day of earnings as well today. So you have Maruti, there's TVS Motor, there is Colgate, there's United Spirits, a lot of non-index large caps as well coming out with their numbers today. But on the equities front, we have Vikas Jain of CLSA who says that the FY23 fiscal deficit may end up being 6.2% of GDP versus an initial budget of 6.4%, as a higher welfare and subsidy spending as well as a miss on telecom and divestment receipts will be more than offset by very strong tax collections. He forecasts an FY24 fiscal deficit of 5.9%. He says with this being the last full-year budget before the national election in early 2024, they will keenly watch any measures to push rural demand. He expects reasonable capex growth but will keenly watch out for any innovative infrastructure financing. Vikas says any tweaks to tax incentives for home loans and investment would be relevant for some stocks, and changes in taxes on cigarettes would impact ITC. That's a primer on what to expect from the budget, perhaps?
All right. Well, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says the dollar index fell below the 102 levels and continues to remain below that level, helping Asia ex-Japan currencies. As a result, he says the rupee opened below the 81 to a dollar mark yesterday, but got bought over to push the dollar INR pair higher at close. He says oil remains biddish, and given this backdrop, expect the dollar INR pair to trade in a range of between 82.35 to 82.5 to the dollar for the day.
Okay, and let's also get you some views on the bond market. Bhaskar Panda says Indian bond market yields had a mild rally due to more supplies. He said wait for the budget announcements is the watchword now. Expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.38% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll be looking at Axis Bank, Tata Communications, Gland Pharma, Poonawalla Fincorp, Supreme Petrochem, Shoppers Stop, and KEI Industries. They are stocks on the back of positive news flow. But on the flip side, we have Concor, Syngene, and Zensar Technologies that could react to negative news flow.
Okay, well, Gary Schlossberg is joining us now. He's global strategist at Wells Fargo Investment Institute. Gary, great to have you with us here. Thanks very much for your time. The market in the US is creeping higher, slowly but steadily, especially the NASDAQ. What's your sense, Gary? What's going on?
Optimism on inflation, optimism on the outlook for Fed policy, not necessarily pivoting in the other direction, but shifting gears, easing the pressure on a number of sectors in the market, notably technology. Of course, given their extended earnings stream, they are sensitive to the discounting of those earnings. So as interest rates fall, that provides support. And of course, the earnings numbers are just coming out now, a little bit of optimism there. A little bit of apprehension about the outlook for economic growth, the onset of a recession. Some of the recent economic data have softened up a bit, but the net of it all, I think, is certainly constructive for the market, and it's showing.
It is showing, of course. There's big moves coming into the Indian market as well. But can India repeat the performance that they saw in 2022? That's the big question, right, Gary? There was a huge outperformance, and we ended in the green compared to a big sell-off across global markets. Even if there is a recession, do you think India can continue to outperform?
I think they can for a time. We'll have to see the growth trajectory in China as they get by the COVID lockdown. We're starting to see things stir a bit. We're looking for a stronger second half growth in China. Finishing the year, end of year over end of year, growth of close to 6%, with a lot of that strength coming in the latter part of the year. So given valuations in China, the pickup in economic growth, that will pose a challenge to the Indian market, which I think still is benefiting from pretty good fundamentals. We do have slowing global growth. We think the global economy will be winding down, not as much as anticipated earlier. We do have the lagged effect of interest rate increases from the Reserve Bank last year. But away from that, agriculture may do a bit better. You had mentioned earlier in your show about fiscal stimulus providing some help to the economy. We're looking at a growth rate we think of anywhere from 5.5% to 6%, which will look quite good by global economic standards next year, except perhaps for China in the latter part of the year. But absent that, I think the Indian economy is and the market should do relatively well over the course of 2023.
All right. Hi, Gary. Good morning. With regard to the Fed rate hikes, the street, I just read quite a few articles and quite a few global views that come in there. And most of them, they're getting a little complacent. They believe that, in fact, we're not going to see more than 25 to 50 basis points for the remainder of this year, some articles suggest. What are you working with? 25 basis points in February? And post that, do you see more rate hikes coming about?
Yes, we're, I guess, in that camp. 25 basis points on February 1st, and then another one or two, more likely two, 25 basis point increases at the two meetings following that. Our view is that inflation may percolate a bit over the next couple of months, may actually edge a bit higher. But as we move toward mid-year and the latter part of the year, we see inflation rolling over, moving down noticeably. That sets the stage, we think, for the Federal Reserve to be moving to the sidelines, assuming we're right on that inflation trajectory. We're also looking for a mildly moderate recession during the middle two quarters of the year. And that should reinforce that view that the Federal Reserve will proceed more cautiously, eventually move to the sidelines in the latter part of the year. Could even see an interest rate cut or so very late in 2023 if that economic scenario plays out.
Okay, that is the kind of optimism we wanted to start our day with. Gary, thanks a lot for joining in. Always
Thank
good
you.
to start your day with some positive views, right? Have a good week ahead. Well, that's a very constructive view, actually, not just on India, but across the globe. The macro data is improving. The worst of the inflation and interest rate fears are now behind us. So perhaps, there could be some more on the upside for equities. Let's slip into a quick break. But before that, here's a quick programming note for you, our viewers. CNBC TV18 has compiled a list of top 20 stocks to watch out for this year. It's a carefully curated list of companies that warrant a closer look in 2023 based on factors like growth prospects, new launches, management changes, reforms, etc. As a disclaimer, this is definitely not a recommendation list, but a list of companies which have meaningful triggers lined up this year. Tune in to CNBC TV18 at 10 a.m. today, where we will give you a sneak peek into the names and reveal the list. Welcome back to Bazaar Morning Call. This morning we have plenty of cues to talk about, and the SGX Nifty is making sure it's a party on the Lal Street, at least for the bulls. But let's talk straight about, let's get straight to numbers now. Axis Bank came out with a very good set of numbers. In fact, a lot of brokerages have raised their target price on the stock post-earnings. Abhishek is here to tell us how the numbers looked. Abhishek, over to you.
The P&L is very strong. However, there are some flaws in the results. So to begin with P&L, the net interest margin is at 7.5-year high of about 4.26%. Best return ratios that you are seeing in last 30 quarters, both on ROA as well as on ROE front. The asset quality, gross NPA ratio and net NPA ratio, they are one of the best in last 7-8 years. Restructured book as well as watch list, they have reduced a lot. So the stress on the balance sheet is actually on the lower side. However, on the flip side, the deposit growth has moderated now to about 9.9% YOY. So for incremental loan growth to happen, they need a lot of deposits, especially on the retail side. Talking about the retail side, the retail loan growth is actually on the lower side at just 1.4% quarter on quarter. This compares to peers in the industry having a growth rate of more than 4.5% sequentially. So P&L, both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, Mangalam joins us to tell us about Concord. Mangalam, not too impressed with those numbers?
Well, not too impressed by those numbers. You know, if I just take a look at their revenues, it was up around 3.5%. The EBITDA actually declined by 7%. You'd wonder why is it that the net profit then grew by about 3.5%? That's because of other income that jumped by almost 90%. We already know the volumes for the company. They had updated it, pre the results itself. Overall volumes grew by about 5%, but Exim, the mainstay of the company, saw a revenue decline of 4.5%. Margins largely stable at 23.3%. The land license fee, however, has been largely in line. The big trigger for Container Corp is not numbers, but now privatization.
Okay, thanks a lot for that. Privatization is the next big trigger for Concord, so we'll keep our eye out on that. But let's hop across to Reema now. She's tracking some numbers as well. Tata Com is on her radar. Reema, good morning.
Hi, good morning. Tata Communications numbers are looking good. Revenue growth has picked up to 8.2% on a year-on-year basis. And the big positive is their data revenues are showing you a double-digit growth for the second consecutive quarter. The data revenues were impacted about a year ago on account of slower decision-making, supply-side constraints, but now those appear to have eased, and for the last 2 quarters, data revenues are up over 11%. The miss in the numbers is the decline in margins. Margins down 210 basis points on a year-on-year basis. Another internal we should take note of is that while the debt has come down on a quarter-on-quarter basis by 130 crore, you are seeing a jump in the company's interest costs. So this rising interest rate has been ballooning the company's finance costs, and that is a monitorable that we will be tracking. But on the whole, I'm going to go with green because of the pickup that we are seeing in their top line and the strength in their data business. Back to you.
All right, got that. Reema, thanks for that. Well, let's hop across to Ekta for a daily dose of pharma. Ekta, you're tracking Gland and Syngene.
Yes, absolutely. Both of them on the back of numbers. I'll start with Gland. Remember, it was the third consecutive quarter for revenue and a profit decline. The company says the challenging business environment, the supply chain challenges continue to impact the business. Revenue was down 12%. Street was estimating a flat performance this time. Core markets, which is 70% of their business, was down 11% year on year. So there was a decline in the core markets, which took place this quarter as well. Profit down 15%. Street was anticipating a decline of 3%. Positives this quarter, margins at 30.9% versus 32.8% year on year, but in line with expectations despite a profit decline and better than 28% in the previous quarter. Net cash remains strong at over 3,800 odd crores. Stock is down over 60% from its 52-week high. And hence, a lot of the brokerages are now possibly getting incrementally positive, saying that maybe the worst is behind. And hence, I'll go with the green, but it's difficult to say with Gland because there are a lot of variables with this particular company. Now in Syngene, revenue was up 23%, profit was up around 5 odd percent. The street was anticipating a higher growth, but remember, revenue is up 20% plus for the second consecutive quarter, and the profit growth is in line with expectations. Margins have improved on a Q-on-Q basis, and company has maintained its guidance, which they had increased in July 2022 for FY23 as well. Going with a mild red simply because it's already trading at around 51 times, and also the revenue is probably a tad below what the street was expecting.
Okay, thanks a lot for that. Well, let's move on. Abhishek is tracking Poonawalla FinCorp. Abhishek, good morning.
Morning, Sonia. So it's a strong set of numbers coming in from Poonawalla FinCorp, especially on the disbursements and AUM growth. Disbursements are up nearly 75% YOY and about 9.7% sequentially. AUM growth is very healthy at about 27.6% YOY and 5.8% sequentially. The standalone net interest margin at 10.7% has actually expanded both YOY and quarter on quarter. And asset quality has also improved, a decline of 8 basis points on the gross NPA ratio. One interesting part that I noticed in the result is that the restructured book of Q2 FY23 is now mentioned as 246 crore. Remember that in the previous quarter, it was mentioned as 619 crore. And in the quarter gone by, they have sold down their housing portfolio. So 60% of the restructured book has been sold. Let's await further clarity from the management. PNL, the calculation shows that NII growth is at 44% plus YOY and about 8.5% sequentially, while PAT growth is about 78.5% YOY and close to 12% sequentially. Back to you.
Okay, thanks for that, Abhishek. Well, let's hop across to Sonal. She's joining in and she's got quite a few stocks on our radar. Sonal.
Good morning, Nigel. Let me start with Zensar Technologies. Weak set of numbers. It was a CC revenue, constant currency revenue decline of 5.3%. Dollar revenue was down 5.9%. They also had EBITDA coming in at higher than estimates at 11.3% versus 8.5%. And profits also grew, but there was a big miss as far as the revenues are concerned. So going with red here. Supreme Petrochem, it improved on a lower base on a sequential basis. Last quarter numbers were really weak, so there has been an improvement. Revenues were down 4%. But EBITDA went up by 50%, margins were up 300 basis points, and profits were up 48%. Shoppers Stop, strong set of numbers, best ever EBITDA growth led by the festive season as well. Revenues grew 19%, there was an EBITDA growth of 16%. Margins, however, saw some decline this time around, and profits were also down because in the base quarter there was an exceptional gain as well. The average selling price grew by 23%, and the beauty category reported a growth of 18%. That is sales of around 230 crore rupees. Moving on to KEA Industries, good set of numbers, revenue growth of 14%, EBITDA was up 15%, margins came in flat on a YOY basis, but profits were up 28%, so green on that one is expected. All right, thanks a lot for that. So here's a quick recap then of our top stocks with positive news flow. There's Axis Bank, Tata Communications, Gland Pharma, Poonawalla FinCorp, Supreme Petrochem, Shoppers Stop and KEI Industries. While stocks with negative news flow, there's Concor, Syngene and Zensar Technology. But let's quickly get an update on what's happening in the world of crude. In fact, in commodities generally. Manisha Gupta is here for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Crude it is because we are trading at $82.88.5 for both the varieties. So strong gain up overnight. We're trading at a 2-month highs for both of these varieties. And this is as China's traffic at the week-long holidays bodes well for fuel consumption. And those numbers are coming in strong. Also, the European Union and G7 will cap the prices of Russian refined products from 5th of Feb. And that's what the markets are factoring in. European Union will also embargo Russian oil by sea from 5th of Feb. So, with 10 days remaining to that, markets are are expecting or anticipating some reaction from that always. IEA and OPEC already have said that they are very bullish on 2023 demand outlook. So whichever way that you look, there is support continuing in case of crude prices, which shows in prices. And good gains is what we continue to see in metals. You have gold prices trading at a 9-month highs, copper prices trading almost at a 10-month highs right now, and strong buying in zinc and aluminum, where you have seen 1 to 1.5% of gain coming overnight.
All right, Manisha, thanks very much. So far it's been it's slowly creeped up, right? It's to $87, $88. And at some point it'll come into sharp focus once again, especially if it crosses that 90 to a dollar mark. That's a big single most important macro variable for the economy here. We'll take a quick break here, more on commodities later. But we come back with Dipan Mehta of Elixir Equities. We'll talk specific stocks, his views on Axis Bank and a whole lot of IT names which have been doing well. Stay with us. Later, we will also connect with Kamal Singhal of Arvind Smart Spaces. They reported their third quarter earnings, so commentary on the back of that coming up as well.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC TV 18. If you're just joining in, then overnight the global cues were quite positive, and the SGX Nifty suggesting that we're going to be off the blocks in style. A 90-point uptake is what we're bracing for. But let's discuss a few stocks, and to help us out with that, we're joined by Dipan Mehta, Director at Elixir Equities. Hi, Dipan. Good morning. Dipan, let's start off with the banking name. Axis Bank, well, the NIMs came in at the highest we've seen in the last 30 quarters. How do you read these numbers and your preference from the banking space?
Good morning, Nigel, and thanks for having me on your show. I think excellent set of numbers coming through from Axis Bank, better than street expectation, and you cannot find a fault except that perhaps the deposit growth was at just 10%. And I think that's a key data point that we are monitoring for all the entire banking sector, because the next stress point is going to be raising of resources for lending. I think all the various other parameters like growth in credit, net interest margins, and NPA and other operating costs all within control and best ever. But the deposit growth seems to be lacking, and at some point in the future, that may tend to impact the overall growth in the loan book. But nonetheless, I think great set of numbers coming in from Axis Bank. It follows what we saw from a lot of other private sector banks, including ICICI, Kotak, HDFC, IndusInd Bank, IDFC First. I think we've been truly surprised by spectacular set of numbers from the banking sector.
Okay, spectacular set of numbers from the banking sector. Well, across the board, there have been, target prices have been raised for Axis Bank as well. I think one of the most aggressive on the street is MK. They've raised their target price to 1,300 on the stock. Apart from that, UBS, JP Morgan have raised it to 1,100 and Morgan Stanley is at 1,200. So, I take your point that nothing to really fault in these numbers. But since we're talking about very good set of numbers, one stock that saw a follow-on rally yesterday, Dipan, was Persistent Systems. I mean, it's had a super run ever since its earnings. Do you see more upsides here, considering that, these are stocks that are looking good from a valuation standpoint, given the fall we've seen recently?
Good morning, Sonia. See, this is what I've been trying to say, that when the crunch time comes, the boys get separated from the men. So we've seen what happened in Infosys versus rest of the pack. Their focus largely on winning large deals is helping them sail through. And when it comes to mid-cap IT, the focus of the companies on specific verticals, on specific clients, on specific practices or certain IP-led businesses, that is what is enabling them to continue their growth rates despite there being spending cuts all around. And you're going to find this trend increasingly going forward as well. One more name comes to mind, Coforge. I think they came with an excellent set of numbers and sustained growth rates over there as well. So you're going to find these 3 or 4 lovely nuggets in mid cap, 1 or 2 in large cap, which will continue to sustain growth rates in that 20 zone, and still, despite challenging environment, and still deliver those kind of growth rates. And that's where investors need to focus on. Mind you, these stocks will be expensive, but over the longer run, they will generate a higher return than rest of the IT pack.
Oh.
Right. Dipan, hi, good morning. Good to have you with us here. The one space on the other side yesterday was cement, right? Which completely got smashed. Of course, started with Ultratech's numbers, but Grasim, Shree Cements, Dalmia, India Cement, JK, anything between 4, 6, 7% cuts in the cement space. Your thoughts?
Yeah, Prashant, good morning. I see a long bear market for cement stocks, and there are structural changes which have taken place in the industry. Last 3-4 quarters, these companies haven't been able to pass on cost increases. There's massive buildup of capacity taking place over there, and that's going to lead to some amount of disappointment when it comes to price discipline. So I'd be very cautious when it comes to cement. There are so many other sectors which consume cement itself, which are looking far more exciting, like real estate, engineering, construction, infrastructure, space. I think all of these need to be given preference over cement stocks.
I don't know if you track Arvind's Smart Spaces, but I would want you to listen into the conversation because it was a very good set of numbers that the company reported. In fact, it's the best ever quarterly sales in Q3. Its collections have also looked very strong. Kamal Singhal, who's the MD and CEO at Arvind Smart Spaces, joins us now. Mr. Singhal, good morning and thanks a lot for joining in. So, you know, if you go through your numbers, you had indicated that there could be a 25 to 30% year-on-year growth in pre-sales for FY23. Now, you did about 600 crores in FY22. So, given that run rate, we're looking at about 750, 800 crores in FY23. Is that what you will end with in terms of pre-sales? And then what is the kind of run rate that you're looking at in FY24, given how strong business has been for you?
Yeah, correct. Thank you very much for having me on the show. Good morning. Yeah, we said that, as you rightly mentioned, that we've been growing at a rate of around 25 to 30% of the last few quarters and years. If you look at the numbers in the last 9 months, we have kind of achieved the same kind of growth, around 25% in the fresh sales. And of course, we are hoping that similar trajectory will continue in the last quarter to come, and we should be looking at broadly the same kind of average that we have been talking about. Yeah, I mean, 750 to 800 is something that adds up to this 25% growth, and that's what we are hoping for.
All right. So 750 to 800 crores, Mr. Singhal, for this year. But for FY24, how are things looking? I mean, what kind of a run rate are you looking at on that sort of a base? And also on pricing, you know, both from a stock market perspective as well as from a consumer perspective or a client perspective, are you able to push through price increases even now?
We are in the middle of a major investment cycle at this point. As you are aware that we got into second platform is SDFC, which gave us quite a bit of firepower in terms of investments. 1/3 of that investment is already committed. Out of 900 crores that we had on with us under the platform, 300 is already committed, creating a top line of around 1,000 plus, etc. And of course, further investments will happen. So next year is looking very good in terms of fresh launches and fresh booking, etc. And the growth rate, which we have been talking and seeing the last few quarters and years, should continue, and we should even improve further.
So more than 1,000 crores? More than 1,000 crores for the coming year, for sure.
We don't. It's not our normal policy to give guidance on the specific numbers. But yeah, I mean, broadly speaking, the trajectory tells you about very similar numbers that you're talking about, for sure. Yes.
Okay. On the business development front, you are targeting to launch about 1 to 2 projects per quarter, which will of course aid your pre-sales. But you've also added 7 acres to your Dobabalapur Road project in this quarter gone by. Just want to understand what is the major capex that you would plan in terms of both land addition as well as project. What would you need over the next 1 to 2 years, and how are you looking to fund that?
So if you look at the short term, which is say next 6 to 9 months period, we intend to invest anything between 700 crores to 1,000 crores in the new pipeline, out of which, of course, 600 crores will come from the platform itself. At this point in time, the company is debt-free. In fact, we have a debt-positive situation right now, minus 34 crores for the company as a whole. And hence, we have a very significant headroom to raise debt. I mean, even if you to remain within very conservative norms of below 1 debt equity, etc., we have a very significant headroom out there as well. So 700 to 1,000 crores is something that we are looking to invest in the next 2 to 3 quarters.
What would that mean in terms of a peak debt number? Since you're debt-free and you're looking at investment of 7 to 1,000 crores, as you said, from the platform, you'll get close to around 600 crores, which is still unutilized. So peak debt levels that you're looking at, say, for the next couple of years, 24 and 25.
So historically, we've never crossed the debt levels beyond 1 debt equity. And it's more like 0.7 and 0.8 that we have been doing and raising in the past. If we were to keep those kind of conservative limits, and that's what the idea is, I think we should not be crossing more than 300 and thereabouts crores of debt in the next couple of years.
Okay, so you're comfortable that the debt, now you're debt free, but you're comfortable that debt should not be more than 300 crores. Got it. Just a larger
Absolutely.
question, geographically about 60% of your pre-sales comes from the Bengaluru region and the rest I understand comes from Ahmedabad. Now we are seeing some slowdown in Bengaluru in terms of, the tech space, the startup space. There are large amount of layoffs, etc. So would you be looking to diversify to any other regions? Pune, MMR, I mean, I know you have a presence there, but would you be looking for geographic diversification over the next 1 to 2 years?
Yeah, sure. I mean, we have been doing fairly well in Bangalore and Ahmedabad. Bangalore, in fact, is our second home as a group, and in fact, more than half of our volumes are coming from Bangalore at this point in time. By the way, that market is still very, very strong. I mean, all this talk of tech going slow, etc., is all there. But I think the size that we are and the products that we are bringing, and there is a natural churn happening in the industry where more corporate and organized players are kind of gathering the bigger pie of the market per se. Even this churn is possibly a great fodder for players like us to keep growing in the market, even if there was a little bit of a slowdown happening here and there in specific sectors, as you just mentioned. So we are fairly comfortable and confident that Bangalore will keep growing healthy. In fact, last quarter, we launched one of the finest and most successful projects out there, which got sold in 10 hours. So it gives us hope and confidence and reasons to believe that Bangalore is not going to be slowing down very soon for us, and we'll rather grow very, very, very aggressively out there. Besides that, as you mentioned, Pune and MMR definitely is our focus. We have been talking about it for the last few quarters. We have put a lot of resources out there in BD, and that definitely is going to be our third market along with Bangalore and Ahmedabad in times to come in very near future. I mean, right now we are busy doing and exploring options out there, and I'm hoping that we should be able to click something very soon.
Okay. Kamal, thank you very much. Good speaking with you. Appreciate you joining in on CNBC TV 18 this morning. Thanks very much. Deepan, of course, is still with us. Deepan, I don't know if you track the company. If you do, I mean, welcome to comment. Another one which I'm not sure you have a view on is a company called Nureka, which basically houses the Dr. Trust medical devices business. Last 2 days, 30% on very large volumes as well. I don't know if you have a view, you've looked at it.
Yeah, Prashant, you caught me on the wrong foot here. Don't
On
really
both,
closely track any of these two companies per se. But real estate, I'm very positive on. But my preference is for the larger companies operating in key metropolises like Macrotech as well as DLF. I think they'll be able to generate far greater alpha than some of the smaller players. And it's a more de-risk business model with many projects and a significant land bank and a clear preference to be a joint development partner for many of these smaller builders. So I think that's the way I would like to play real estate with the larger players over there per se.
Okay, all right. We have a lot of auto numbers that kickstart today, Dipan. There's Maruti, there's TVS Motor. Expected to be a pretty strong showing, at least for Maruti. For TVS, there's once again that export pressure kicking in. Tomorrow, there's Tata Motors, Bajaj Auto. I know this is not a space that you like, but anything in this space, there are ancillaries, there are tire companies, anything that's worth a mention ahead of numbers?
See, Sonia, in two-wheelers, you have to go for in auto, you have to go for the four-wheelers. So you could look at tractors, commercial vehicles, passenger vehicles. What is to be avoidable is the two-wheelers. So TVS Motors, Bajaj, Hero MotoCorp, we are completely avoiding. Only company we like in two-wheelers is Eicher Motors, and you can look at the numbers when they come, it will be pretty decent. And within the four-wheelers, the top preference is M&M. I think the company has completely transformed itself and is far more focused, has got an exciting set of models. And the cost structure also is pretty much well in place. So I think amongst the best-in-class numbers should come from M&M. But Maruti also should do well. And within the auto ancillary preferences for companies like Uno Minda or Minda Corp, I think they've outperformed the industry by a huge margin. And I think that trend should continue going forward as well. But there are going to be many outperformances within the auto ancillary space as well, considering that after several years, we are seeing a nice upswing in volumes and growth for the sector as a whole.
Okay, let's do one thing. Let's take a quick break. When we come back from the break, we'll get back to talking about the markets and the big moves that you're expecting this morning. But let's tell you what's lined up in the next half hour of the show. At 8:45, Anuj will be joining in for a quick trade setup. Post that, we will bring you the top stock picks for the day from our technical and F&O experts. Following this, Prashant will bring you the Market Laser segment where we will analyze one stock and even a sector through a technical lens. And before the market opens in CNBC TV 18 Stock Board, we will highlight the top stocks in the news to focus on for the day.
Okay, welcome back. 15 minutes to go for the pre-open session. SGX still promises a strong start, about a 90-odd point gap up, 18,236. Anuj is here with how he's seeing things. Anuj, hi, morning.
Morning, Prashant. Well, finally showing some signs of a breakout after a long time. What I need to see is two closes above 18,250. 18,232 has been the recent swing high on the Nifty. So maybe two closes above 18,250 takes market to that much awaited breakout. The one thing is that most index companies are coming out with good numbers. And even though the market reaction may not have been that conducive, the other thing is that the market has a firm leadership now in IT. And, in fact, from the recent lows, we've seen 13% rally in the Nifty IT. And, large stocks like Infosys and TCS are getting back into some kind of a bullish groove. HDFC Twins are supporting the market. The only missing piece in puzzle really has been ICICI Bank, which yesterday also after good results actually fell a bit. Global cues are strong. The market now pricing in a 25 basis point rate hike. If you look at the Nifty, yesterday we presented this table. The risk for the market yesterday was an outside day. I mean, as in if we had crossed 18,145 on the upside, but had broken 18,016 on the downside. Now, first part played out, which is the high was higher than previous day. Luckily for the bulls, the low was preserved. And after a long time, we have made a higher high and higher low on the Nifty. I think that's very bullish for the market. It makes market into some kind of a positional long zone. And with 18,100 as stop, intraday longs are not making too much money. The bank Nifty has become so lopsided. It's just about HDFC Bank versus the others. If you see the 1 month chart, HDFC Bank is up 3%, while ICICI, SBI and Kotak, they're all down 2%. So there's a 5% divergence which is visible between HDFC Bank and others. And my sense is clear signs that money is moving from ICICI Bank into HDFC Bank once again. So that's maybe a bit neutral, but clearly IT helping the market and being leadership pocket could help the Nifty finally get past that hump of 18,250 or so.
Okay, thanks for that. So there are a lot of bullish cues coming through. Let's pose that question to Sudarshan Sukhani and Mitesh Thakkar. Gentlemen, morning to both of you. Sudarshan, would you agree that the Nifty is now all set to break out above this trading range of 17,800 to 18,200? And if this breakout comes through, what are the kind of leaders of the market now?
Good morning, Sonia. Throughout last week and yesterday, I have been saying that the Nifty is making higher lows and we should be long in the market. And this was repeatedly said yesterday also. And we had two dips where you could actually buy at on a lower level than the open price. That theme continues. Now, I have no way of saying the Nifty will go to this particular level or breakout. The important point is momentum favors the bulls and we should be on the long side of the market. And I usually let the market tell me where it wants to go. And the market doesn't listen to me. I only know that I should be long.
Okay, gentlemen, good morning. Mitesh, what about you?
Good morning, Prashant. The idea is that the consolidation has been there for quite some time, and as Anuj was also highlighting, there's a stronger chance, and we discussed that yesterday, that eventually we might break on the upside, given the fact that a lot of daily indicators now have started looking up from the oversold level. So the key levels to watch on the upside, I think 18,185 remains the key pivot, and I think we might be there in the opening trade itself. So if we start building upon the gap up and then we see a cross and a comfortable move beyond 18,185, then I think 18,250 should also be taken out and we should be at least heading towards 18,400. So in the short term, the setup is positively biased, but I think what I want is some follow through post the gap up.
Okay, all right, Mitesh, what about individual stocks?
Yeah, so I have, morning Nigel, I have more of buy calls today very clearly. ITC is a buy with a stop at 332 and look for target of 350 here. It's done good base building and now showing signs of restarting in a move. Petronet had some kind of a price and volume action, so that's a buy. I think it's getting into a short-term uptrend. It could test the all-time highs of 240. That being the target, the stop loss should be placed around 219. And Birla Soft is a buy as well. Here I would recommend a stop of 298 and a target of 312. And one sell call, India Cement had some kind of a breakdown. Keep a stop at 214, look for targets of 195.
Okay, and Sudarshan, how about you? Since IT has assumed leadership now yet again, Do you think that these are stocks that one should continue to buy? And what else are you looking at this morning?
Actually, you're quite right, Sonia. The good quality IT stocks are worth buying into. But I don't have that in my trading list for the day because IT is covered by the Nifty in any case. And it's more of an investment theme rather than an intraday theme. I have stocks that are possibly ready for bigger moves. Canara Bank is one such stock. So Canara Bank is a buy with a stop under 321. It's just very unusual today. I have only buying ideas. GNFC is a buy. The stock has gone through a dip. It's been consolidating for a long period of time. It's a buy with a stop under 565. PEL, which is Piramal Enterprises, that's a buy. Again, a fairly bullish pattern, stop under 830. And finally, Hind Petro, which again comes in my buy list with a stop under 244. The reason I focused on mid caps was that the Nifty takes care of the large caps.
All right. Okay. Thanks a lot for that. We need to take a short commercial break, but we'll, of course, come back with lots more. A quick programming update for our viewers. CNBC TV 18 has compiled a list of the top 20 stocks to watch out for this year. So do stay tuned in for that. It's a carefully curated list of various things that you can watch out for. But it's a disclaimer. This is not a recommendation list, but a list of companies which have meaningful triggers lined up this year. So do stay tuned into CNBC TV 18 at 10 a.m. You'll get a sneak peek into the names and we will, of course, reveal the list as well.
Well, we'll slip into a short break. We'll come back. We'll get you pre-open rates. We'll also be joined by Mr. Anil Gupta of KEI Industries to discuss their past quarter's numbers and the way ahead.